This is a Stock Trading Reality Podcast, episode 125.
It's the evolution of this journey that we all pursue here, and trying to find the strategy that most fits our individual personalities.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. It took him a while, but members have now met his wife, Clay Trader.
And I don't know, if you ask me, I think that's just being like a good husband, because I'll be fully honest, and I don't think this is the first time that I've said it, but with these meet and greets, when they were first going on, they literally, I'm meeting up with people that I met in an internet chat room. And if that's not kind of like, that's kind of sounds a little shady. No, I would agree that sounds a little shady. It sounds a little creepy. And in fact, actually, wow, this worked out absolutely perfectly. And I promise this was not planned. But today's guest, I still remember in Baltimore, the ever first meet and greet. We're sitting at this restaurant. Everybody's eating burgers. And he just brings up, he's like, did anybody else, and it was all guys at this first one, anybody else's guy or girls or girlfriends or wives think that it was kind of weird that we were going to meet other guys that we met in a chat room? And we all kind of laughed, and we were just like, yeah, actually, my wife or the girlfriend was kind of like, you're doing what? You're driving to Baltimore, why? And so it's kind of funny how full circle there. Today's guest actually brought up that point, but it was, the very reason why, like, I'm going to test the waters quite a bit here first before I ever let any of these people that I met in an internet chat room meet my wife. But at our most recent one in Columbus, Ohio, my wife came along, and not only my wife, I actually brought some close friends with me, and they were there too. So, some members got to meet not only my wife, but close friends, and it's been a success. I would say that when I'm willing to introduce more of my personal life into the community, that just shows that, hey, wow, these people are cool. I feel comfortable with it. And, there's not any psychopaths so far that have shown up, with baby oil wanting to do weird things, minus Nate Wilson. But besides that, Ches, would you agree that, because you've been to, 4 out of the 5 meetups? These people are just, actually, you've been to 5 because you had your little Colorado thing, but people, these are just normal people, right?
Yeah, and it helped for the first meetup that you had 10 bodyguards on retainer too. So obviously, no one was getting close enough to shake you.
Shield. When he signed the contract to come aboard, it was at the first meetup. You must take any punches thrown. So Ches was prepared.
I was definitely prepared, but yes, it is. Everybody, when I told my mom and I told Kelly, my wife now, that we're going to do this stuff, she's like, really? You're really going to go do that? She's like, you got a lot of faith. I'm like, yes, I believe after talking to these people for months and years at a time. I'm hoping that they're completely normal. And yeah, obviously, the meetups have been very, very smooth. It's great to, really put, obviously we can send pictures and stuff to each other, but, put a face to a name that essentially we might I actually talked to more people in the chat room probably than some of my friends that I actually grew up with. Just because that's the community we've built here. So, yeah, it's nice to do that. Nice to see they're completely normal people and nobody's been shanked.
Yeah, and to just kind of prove that you actually believe that, the fun fact about Ches is he organized one because he's out in Denver. And how many people did you have at your little makeshift one, like 8 or 9?
I think we had 9. We had 8 at first, and then 9th one showed up because he was about 2 hours away. But yeah, we had 9 people there. I want to give more credit to Rena and Surly Matt because they did a good amount of the planning and picked the location. But yeah, I was just kind of the middle guy and make sure everybody gets in contact with everybody. But yeah, we got another one actually planned in August, so I'm pretty sure this will air before it. But yeah, these aren't technically quote unquote Clay Trader sanctioned meetups, but it's literally just members in the community. Who live in the same general region, just meeting up. So yeah, it's nice. Definitely develop some good friendships and stuff like that too.
Yeah, and I'll agree. It's still weird. I'm not offended when everybody says, "Wait, you're hanging out with people from an internet chat room." I get it. There's that stigma attached, but yeah, you meet some really cool people. So with that, like I said, I kind of already let the cat out of the bag. The one member's name is PH, and we're doing kind of a welcome back type episode as we've done in the past, but PH was on episode 15 as we discovered before we actually got recording. So we're going way back, and he's still around. He's still fighting. He's very well spoken. I've met him twice in person. He was at the first ever one, as I said, in Baltimore, and then he also came to Nashville, Tennessee, and hung out with us. So he's a great guy, and he's got a lot of things going on, including a website that he's launching that he talks about in the back half of the interview. But some really, really good conversations in terms of building strategies, bendable rules, non-bendable rules, all sorts of dynamics that he's looking at. And he's made a whole lot of progress since the last interview. So let's just get let's get started with PH. It truly was a great conversation. PH, welcome back to the show.
Thank you, Clay. Appreciate that. Appreciate you guys having me back.
We were just having a little contest of who can navigate the site better to figure out what episode you were on. Because for those of you that have listened to the past episodes where we brought back a guest, Ches and I have been just not very professional. We had no idea what the previous podcast number episode the person was on, but we ran a search, and we're going old school today. And this is going to be interchangeable. PH is what he goes by in the Inner Circle chat room, but his name is Steven. So PH and Steven, they're one and the same. But he was originally on episode 15, and here we are on episode 125. So, and he's still around. He's still trading. We think I guess that's the whole point of this. We're gonna, learn about all that. But it is great to have you back. And I guess just right off the get-go, are you still trading? Hopefully, this is a yes.
Yes, I am still trading. But wait, I have to ask real quick. The comment about you're going old school, was that a comment about my age, or
He's commenting about all of our ages at this point.
Yeah, I guess. But yeah, and my answer to that would be whatever personally offends you, that is how I meant it. So, take that as you will. But
I do not get personally offended.
In all honesty, I really do mean that as a compliment, because episode 15, that should give us a date. Let's see. Episode 15 was posted on, no date here.
I think it was like 3 years ago.
We do one a week, so you can do the math, right? There's usually about 4 podcasts a month. His was literally over 100 podcasts ago, and here he is, still surviving in the market. So in all honesty, I did actually mean that as a compliment, because you're still around. You've survived. You're continuing to survive, and so definitely meant as a compliment. So I guess these ones are always free flowing. There's not much structure, but I guess just kind of where did we leave you off last time in your journey? And I realize this is going back, and you are older, so I understand if your memory isn't
apparently
like it used to be.
I'm
but
over 100.
Do you remember where we left things off the last time we talked?
Yeah, I think when we first talked, I was relatively new to trading and just trying to find my way through that journey. And I had found you. I want to say that I had found you a few months before I was interviewed. And at the time, I remember sending you a message saying, I would love to be on the podcast. Not really sure what I can contribute, given that I'm pretty much a newbie to this. And you just said, let's do it anyway, because I did have some past experience. I don't know if you recall, but I had lost a great deal in the market back in the internet bubble.
But here you are today still. And
but here I am still.
Yeah.
And the thing about the losses I took way back then were I wasn't trading my own money then. I was basically giving instructions to a broker to execute the trades for me. But of course, he never came back to me and said, hey, I think you should get out of this position, or you should considering lightening the load. He just kept taking the money and putting through the trades, and I kept losing.
I was just going to say, remember, brokers get paid at the end of the day based on how many trades and how long you kind of last. So a good broker should realize that client success determines kind of the broker's income. But remember, there's new money flowing in every day that somebody wants to do something. And correct me if I'm wrong, when you were making trades back then, I don't know if I want to call it kind of fundamental ideas for why you wanted to buy something, but you weren't using charts at all. You probably were just like, I think this company is good and it's going to go up, and that's why you're buying, or were you using charts back then? I'm pretty sure you weren't using charts.
I was throwing darts at a wall. It was at a time I was actually working in the corporate world, and all of my clients were all the tech companies that were just booming. And so I was basically just investing in my clients and the various different technology companies that I had relationships with. So I would throw in 15,000 in Siebel systems one day, and 3 days later I doubled it. But of course, I didn't take that money. I left it in there.
And, in all, because Chad just shot me a message, which is actually, again, a compliment. This is like 2 years ago when we did this last interview. So really, we have a lot of ground to cover. 2 years worth of time. So if you want all of the kind of background about what PH went through, then yeah, episode 15, you can just go back and listen to that. So, and not to rush or anything, but where did things, and I do remember this. What I like about Steven is he's like a cool guy, and I mean that because he came to our first ever meet and greet in Baltimore, and we hung out, at the baseball game, and then afterwards, and it was a great time. He also came to Nashville, so we hung out there. So yeah, he's like not a psychopath, somebody that I'm like, yeah, let's hang out. So, but I remember walking the streets of Baltimore, and you had your phone, and you were, showing me your options trade. So I know you were doing options at that point in time.
Right.
Are you still doing options? If not, what kind of change that made you want to pursue a different path? But, kind of just give us the pathway of kind of in a broad sense, and then we can narrow down in certain areas if you want, of,
Sure.
kind of where you've been, where you've gone the past couple of years. So I guess right off the bat, are you still trading options?
I am, but not to the extent that I was then. And it's a great question, because it's the evolution of this journey that we all pursue here, and trying to find the strategy that most fits our individual personalities and risk management. And so back when we first got together on episode 15, I had been focused on day trading, and then at the time, I really wasn't finding my groove with it. And then I got into options, thinking that options might be a better match for my personality. I tend to be a little more analytical in the way I approach trading, and I envy people like you, Clay, and like Nate Wilson and all the other members that you have that can just scalp quickly, get in and out, day trade with precision and with speed, and I just can't do that. I need more time to evaluate, analyze, and set up my trades. So I then got involved in options, and I was doing a lot of various different options plays. And that's when we met up in Baltimore. I was heavily in options. I was doing directional trades. I was doing various different spreads, iron condors, you name it. I was doing a lot of that, and it was working out great. And then we had that flash crash that one summer. What was that, about 2 years ago, I think, that we had that flash crash. Yep. And soon after that, like right around that time, the strategies that I was using just weren't working. The market was just whipsawing me in and out constantly. And I again took a step back, reevaluated, and thought, I don't want to be in positions overnight. I don't want to put myself at have that kind of risk where I can wake up in the next morning and the stock is gapped on me and I'm, underwater in a position. So I went back to focusing more on day trading. And I think a big part of that also was realizing that until I could effectively day trade, I didn't know if I could effectively option trade, even though I was doing pretty well at the time with options trading. But then, like I said, after that flash crash, when there was just that constant whipsaw, that's when I decided to go back to day trading.
Okay, so that's, and I love the point you brought up, especially in the beginning, that there's no way for us to tell you if you're a new listener or a new member, whatever it is. We're not in the business of pigeonholing you into one strategy. So just like Steven was saying, it's a journey for yourself as well to find what fits with your personality, your mentality, your risk profile, and that's something you're going to have to kind of experiment with and figure out. So I think it's really interesting, though, that, and I totally remember this time period because I was actually still day trading and it worked much better because, yeah, like you said, there was a ton of gaps overnight with news and just other markets as well. So you come back to day trading. Now, are you still having the intention to day trade options and you're just going to give it another go even though you didn't feel like it worked out so well in the beginning?
Well, I still do options from time to time, but I'm really just focused on fine tuning and a strategy that works for me, and focusing on day trading and I'm getting there. I'm getting much closer. Again, it's a journey that we all have to go through, and to try to find those strategies that work best for us individually. So I am still doing options, but mostly focusing on day trading these days, and just primarily for the reason that I don't want to be at risk for overnight changes in the market.
And just a little context, correct me if I'm wrong, but you're still running your construction business, right?
That's correct. Yeah, I'm still doing my construction business, which was part of the reason why at one point we were talking about doing this podcast a little bit later today. But yes, I'm still doing that. And ultimately, I mean, what I want is to be trading full time. I mean, that is my ultimate goal. But in the meantime, I've got to pay the bills. I have a family, so I am still running my general contracting business.
Right. So it's not like you've been a full-time trader for the past, 3 years, and then, you're still trying to find, it's not an 8-hour thing for you. You have other things going on where you have to devote your time for. So, just to offer a little broad context, it's not like PH is the dumbest person ever because he can't figure that. No, he has a successful business that he's running, and that takes time. He's got a family. So this is still very part-time. Is that a fair statement on my part?
Yeah, it's a fair statement. But I think also part of it is, believe me, I'm envious when I listen to your members, the podcast with your members who just hit, they find their groove right away. And they just go from zero to profitable in no time. And not everybody can do that. And again, for me, it's really just trying to find that approach to trading that really works for me. And I'm very close to it. Like I've singled in, I've kind of focused in on trading gaps now. And that's been my entire focus for day trading, is just looking at gaps these days. And so I'm not looking at, I rarely trade things like Netflix, or I do trade Apple sometimes, but kind of the most popular stocks, like stocks that I know a lot of your members trade, are stocks that I'm just not trading very often because I'm looking at a very specific type of trade every day.
Now, is this still options, or are you just doing straight up equities with these gaps?
Straight up equities. Yeah, so I'm for the options, when I'm doing options these days, it's for a swing trade.
So are you kind of in the world of Ches being an options farmer? Are these more of the advanced strategies, or are you still just going long premium? But I guess we'll jump back to the gaps here in a second. But let's focus on your swing trading. Mm-hmm. So how exactly are you using options to swing trade?
So for the swing trades, I'm just doing directional trades, or sometimes I'll do some spreads. And so, for instance, if I'm looking at a chart and I see a setup that would be the same setup if you were looking at it on an intraday chart, but if I see a setup that I think is presenting a good opportunity for me, then I will take that as a directional option trade. And the main reason I'm doing that because I'm looking at daily charts, and my entry point and my stop loss is going to be much greater, much wider than when I'm doing it intraday. So that's why I use the options, because it's more cost effective.
Absolutely. And I think it's really cool, and just a testament to charts as a whole, is that you are essentially trading, from what I'm gathering, the same exact strategy you might do on a shorter term time frame. But looking at the daily chart, obviously the risk is going to be larger. The reward also is potentially larger. So you're just using options as a way to almost a stock replacement. And I think that's really cool, though, because that's just a testament, like I said, to charts and how they really do work on multiple time frames. You're applying essentially the same strategy on the daily as you are intraday. So I think that's absolutely awesome. And but yeah, to pivot back to your kind of intraday gap stuff. So I mean, what are you generally looking for? Gap fills? You're looking for continuation? I mean, how's that all working out for you? Because I'm glad to hear you said you finally found your bread and butter, essentially. Right.
Well, and it's interesting. One of my other friends that Clay has met, a guy named Jeremy that Clay met down in Nashville. He kind of turned me on to the trading the gaps, but specifically, and I think that this goes for anybody, regardless of the strategies that you pursue, which is that the market is going is going to reward the specialist. So I'm looking at my what I'm trying to improve is my specialty is gap trading. Somebody else's specialty might be, just scalping. So, but all that feeds back to something I've already mentioned a couple times, which is your own personality and your own risk tolerance and what works best for you.
And I that's a great way to look at it. I'm just trying to think. The market, say again, what the market rewards a specialty. Is that what you said?
Yeah, the market rewards the specialists. So
the specialist. Okay, yeah, and that's really true because that's a common theme that Ches and I always talk. I don't think we've ever said it like that, but that's a great way of summarizing it. Is if you're trying to do 15 different strategies and use do forex, options, futures. And, that's the catch-22 of charts is, charts opens up the door to all sorts of things because, a chart is a chart is a chart no matter what you're trading. But the flip side is, it can really kind of tear you in so many directions. Things get nasty. But, when you get focused on something, and that something can be, one or two or three, different strategies. But in other words, us becoming a specialist in a strategy, that does make perfect sense, and that's a great summary of the market's going to pay that because you become really, really good at it. So, I really like, a simple way to kind of summarize a larger concept that, Ches and I have talked about quite a bit. So I guess, Ches, now we have a way to quickly summarize the broad concept of don't tear yourself in so many different directions.
Yeah, absolutely. And
the market rewards a specialist.
Right. And Clay, that even speaks to your style of trading. Granted, you know how to trade a lot of different ways, but your specialty over the past decade has been scalping. So, whatever pays and whatever works for you, that's the one you really should be pushing. You don't need to, like you said, pull yourself in all these different directions, different products. So I completely agree.
And like PH said, it really, it's a matter of personality. It's a matter of risk tolerance. If you're trying to fit a square peg through a round hole, it's just not going to work out, right, PH? And you've, I'm assuming, have had plenty of experience with that throughout your journey.
Correct. Yeah. And I've attempted to trade the way that you trade, and I can't do it. I need more time to look and analyze and set up the trade, establish my entry point, my exit point, and my target. And I know that you can do that on the fly, and who knows, maybe in time, maybe I'll improve on that with experience, but that's just not my mentality. I can't move as fast as you move on things like that.
And it's funny because, listening to that, or if Nate Wilson, or I'm thinking, Axton in the chat room right now, or a Patty, they'd be like, what are you talking about? They would have just such a different outlook, but they're not you, and you're not them. And that's why, to piggyback off Chez's earlier point, we're not in the business of sitting here proclaiming, we have the secret strategy for you, and you have to do this. Well, right. This is going to be different for everybody. And anybody that's, out there trying to shove this down your throat because it's supposed to be what works for everybody, that's not how it works. So so you're looking for a gap. And then are you waiting for, the first 15 minutes? What exactly are you looking for within, after the gap itself has happened?
Right. Well, and I'll say this before I fully answer that, which is that whether I'm doing intraday trades and trading a gap on a specific day or looking for the swing trades, ultimately what I'm doing is I'm analyzing the chart on a daily level to understand the sentiment and to understand what direction the chart is going. And obviously, with intraday trading, you can have a solid bullish uptrend on a daily chart and have a single day that's completely bearish. So what I'm doing is I will pre-market, I will look at gaps, and I'm looking for gaps that are anywhere from, let's say, pre-market from 3 to 10%. And that's kind of the for me the best range. If it's gapping less than 3%, it may not even open as a gap, and anything over, it might just it just might flatline after the opening. So anyway, I'm looking for gaps that are 3 to 10%. I'm looking at what the daily picture is, and most importantly, the previous day, but the days leading up to it. So for instance, if I'm looking at a chart that has had 3 bullish days in a row, and then all of a sudden on the 4th day, it is gapping below a recent pivot, that means that everybody who bought those previous days is trapped, and they're going to panic. And they're going to panic if they're long by selling. So then I'm jumping in there to go short. And then conversely, if it's let's say if there were 3 days of selling, and then all of a sudden on the 4th day, price is gapping up and it's clearing a recent pivot, that means that all those short sellers are trapped. And now they're going to have to buy in order to close out those positions.
And the other people that are going to buy are the amateur rookies that are thinking, oh, crap, I knew I should have held. I can't believe I just sold at the low. Freaking stubborn mode, I'm getting back in.
Exactly.
So those people are also going to buy in along with the shorts.
Right.
You know what I love, though, the most about this conversation, Clay, is the fact that Steven is putting together multiple concepts and applying it into his trading. He kind of comes into the day already with a game plan pretty much based on who's experiencing the heat and is most likely to make the exaggerated move. And that's just another example of, that doesn't come overnight. Granted, we can sit here and talk about it and, put it in plain English. It takes time, though, for your brain to kind of comprehend all of these ideas, and then you can apply it into your strategy. So I just love seeing almost all the pieces of the puzzle come together and forming pretty much what you like to, specialize in.
Yeah,
right.
I kind of cut you off there, PH. So there's been a bunch of selling, then all of a sudden there's a gap up. So after the gap up happens, are you looking to buy right away? Do you want to see how things shake out for the first, X amount of time? But, what happens after you've established kind of the overall quote unquote story of what's been going on, if you will?
Yeah, so it depends on the Sorry, did that come through the I've got a talking clock on my computer.
Nope,
I don't know if
you are good to go. There were no
Okay.
talking clocks.
Okay. Anyway, so what I'm looking at again, this overall sentiment is trying to figure out, who's trapped and how many people are trapped. Are they going to be panic selling? Are they going to be taking profit? What is it that they're going to be doing? So let's say in the case of let's say if it's 3 days of buying, and then we're gapping down below the most recent daily pivot. So again, this is kind of an important aspect to this, which is I want to see a gap that really shows people being trapped. So if there's 3 days of buying and it gaps below a recent pivot, that definitely is a gap that is going to trap all those buyers, and they're going to have to sell. So depending on and that's where I go back to the importance of the last candle. So if the last candle, let's say, is a green candle, if it's a bullish candle, and it's gapping down, it's going to be a gap and go. You can expect that to run pretty quickly. And it might retest a little bit, but for the most part, I'm looking for that to move right out of the gates. And I'll look for the pre-market support levels, and I'll mark those out, and then I basically have that trade set up before the market even opens. So when the market opens, I've got that level. I might even have the order already in my broker, just sitting there ready to execute.
And I know, because I guess I'm wondering myself, what broker are you using, and are these advanced orders, like conditional orders, or I guess walk through the logistics of who your broker is and then how these orders are actually set up.
Right. So I use interactive brokers, and I started out using Thinkorswim, TOS, and of course I was getting crushed on commissions. So I switched over to interactive brokers, and I use interactive brokers for my trade execution. But I'm still I love the TOS platform. So I'm using TOS for my charting, and I'm using interactive brokers for placing the orders. And every time that I place an order, it's a complete order. It's a OCO conditional order. So for instance, typically what I'm looking for is I'm either doing a let's say if I'm going short, I'm either doing a limit sell if I'm waiting for the price to come back up to a level, and I'm just going to short it at that level, which maybe a previous at a resistance level. And then if I'm looking to trade a breakout going short, then I'll use a stop limit. And so when I set that up, I'm setting up my order, which is either typically again a limit or a stop limit, the entry price, the limit entry, the stop that would trigger it, and then at the same time, I always put in my stop loss and my profit taker. And what I'll typically do is I'll set my profit taker at 3 times risk. And then, so it's in there, because what I want is once that order triggers, I want my stop and I want my profit taker already set up. And then once the trade is live, then I'll go in manually adjust it.
I was just going to actually ask that. I was going to say, so granted, I kind of, especially when I traded futures, would do the same thing. And then once the order is live, then you can start managing it, whether it's trailing your stop or readjusting your target based on a low that didn't reach your target. But that's exactly what I was going to ask, is if you're just kind of set it and forget it, or you actually do some active management. So
no,
I was thinking you do
some
management. So I'm glad to hear that.
Yeah, no, I set it up in advance because I don't want to enter. And believe me, it has happened where I literally have clicked execute, and in a split second, I'm filled and I'm stopped out. It was just one of those fluke things. But if I hadn't entered my stop at the same time I entered my entry, I'd be sitting there looking at a much greater loss.
Yeah, it definitely slices both ways. And I was just sitting here thinking, as you explained your order, and you got that, and you got 3 times this, but you also want to put in this, and then if it's at this resistance. And if you're sitting there as a newer trader thinking, geez, that's like a lot of stuff. Well, yeah, trading, it's not rocket science, but it is rocket science at the same time, because it's not like the stuff that you're going to come across out there where, people maybe make things seem like, hey, just follow me. I'll tell you when to buy. I'll tell you when to sell. And I'll just send you a text alert and you can go golfing. That's not how the market works. If you want to figure out this business, if you want to survive in this business, then you need to be able to talk like PH is talking. So if you're overwhelmed, don't be overwhelmed in the sense of I'll never be able to figure it out. Just be overwhelmed with the sense of respect of, okay, yeah, this is not, just like rainbows and butterflies and sweet little old ladies on motorized carts. There's a lot that goes into this, and you got to be ready. You got to have the right mindset that none of this stuff happens overnight. So just from the outside looking in, that's great to hear you talk like that, because all that made sense to me, but I've been trading, but there's a lot of moving parts there, and you're accounting for them all. Now, what I wanted to ask you, though, because I remember specifically, in Nashville, we talked about this, and you had the $100 mark, and you were using this $100 mark as what you felt comfortable from a risk perspective, meaning I'm okay, I feel fine losing $100.
Right.
Does that still exist in your trading? If not, why not? But let's talk a little bit about how you're managing risk and where these acceptable risk amounts are coming from.
Okay. Yeah, so I am willing to risk. So again, another thing that Jeremy turned me on to was the concept of using an R. And the R is basically your risk value. So my risk value is 100. So on every single trade, I'm willing to risk 100 to make minimum of 200, but hopefully 300. And when I set up the trade, the R is what I am willing to risk. It doesn't mean I'm going to lose that much. So once the trade goes live and I'm actively adjusting it, I might end up losing $25, $50. I don't just set it in there and just leave it and not play with it. I adjust it as I see the price action on the charts and also the volume.
And I think that's actually really cool, and I forgot who coined the term, but it's almost like you have to look at your dynamic R too, and like I said, as new listeners, just hang through, I promise it's going to make sense. But essentially, as the trade is going in your favor, if you're not trailing your stop, say you're $25 from target, but your stop loss is $75 away, essentially you're now risking 75 to make 25, so your R is like really screwed up. So that's like the cool thing. I'm actually happy to hear you say that, because there's not many people who kind of bring up quote-unquote R. It really is just risk versus reward, but it's dynamic because, like I said, after trades go live, don't get me wrong, if you're day trading or more so if you're swing trading, I mean, you're pretty much set up, and unless something, It depends on your risk level, of course, but yeah, that dynamic R and kind of the use of R is really cool. And obviously, shooting for a 2R or a 3R is absolutely ideal. Now, here's a question for you: If a trade is going completely in your favor, are you always getting out at the 3R level, or are you going to move your profit taker down and just keep trailing it, especially if the trade is really gone in your favor, to try to get 4R, 5R, essentially taking as much as you can out of the trade, or do you just kind of take your 3R and book it as a profit and you're good to go?
So what I will do is, if the trade really starts moving in my direction, again, once I'm in the trade, I'm constantly analyzing it to see how it's responding. If it's doing what I want it to do, I don't just take my amount and get out, because Clay would yell at me for doing that. So
I thought I was setting you up for failure there, so I'm glad to hear that.
Look, I know better. I know these traps. I'm not going to fall for it.
Good.
No, so what I'll do is, and the reason I'm setting an initial target, again, with my broker, is so that I have that number in there already, and I can adjust it in real time. So for instance, I'll just walk you through. I'm looking at, if I were to look at a trade I set up today. Right. So my entry, I don't remember which ticker this was, but if my entry was $17.28, I then had a stop set up at $17.96. So that means my risk was 68 cents. So, and again, and this is also going to be a huge difference between the way I'm trading and like the way Clay's trading. So at basically 70 cents, I'm looking for a big move here to make 2 times my risk. And I'm just pulling up, I'm giving this example because I happen to have my spreadsheet up where I was punching these numbers in. Honestly, I don't remember whether I took this trade or not, but I'm just giving you an example of how it would be set up. So in this scenario, at an entry of 17.28 and then a stop of 17.96, my 2R target on that is, and I'm shorting, my 2R target on it is 15.92 and my 3R target is 15.24. So those are kind of the levels that I'm establishing up front that I'm trying to hit. Doesn't mean I'm going to hit them. But what I will do is once I'm in the trade, if it goes my direction, then I'm actively moving my stop down to mitigate risk. And so that if it does turn around and go back against me, I'm not losing money on the trade. I try to get to break even as quickly as possible. So at that point, I can just sit back and have no stress about the trade at all. I can just let it do its thing. Still manage it, but I don't have to worry at that point about losing money. And then if it continues to move in my direction, I will then take some off along the way. So once I'm, let's say if I get to 2R and the trade is still moving really well, I might just take off half my position at that point. If between the time that I enter the position and it hits 2R, if I see a level where price is kind of halting and I see that they can't continue to drive the price lower, then I'll mitigate some risk there and I'll take some off. So I'm not holding fast strictly to the rules, but I have my rules set up and then I can modify and adjust them in real time.
Yeah, no, I always, the example I always use in the courses and just a general is, there's a path out there. And you want to be on the path. Now, where on the path you walk, well, that's what Steven's explaining here. He's figured out where on the path he wants to walk. Now, you may be on the same path as Steven, but maybe you're going to walk someplace else. Both of you are on the same path. That's great. You have overall structures. You have overall rules. But within those rules, yeah, some things can be bent. Yeah, some things can be looked at in different ways. But the point is, he's on the path. So that's the key. Now, way too many people, they go off the path and they bend the rules to the point where it's like, okay, yeah, you bent those rules and you are not even close to being on the path anymore. But being on the path is what matters, having those general rules, which PH has done an awesome job explaining. But then within there, yeah, you can, one person may do that, another person may do something a little bit different, and then a third person may do something very much different, but all the three of those people are still on the same path. So that's the key thing, is you want to make sure that you have those general rules. Those general rules actually make sense and are logical. And then within there, just stay on the path. And that's exactly what PH is doing And, Ches sent me over a Skype message while we were talking saying, man, he's got it down. I agree. You really seem to have your path well defined. And are you doing a good job of staying on the path? I mean, are you, when stops are hit, are you still, are you holding strong, or do you ever find yourself still struggling and kind of falling off the path every now and then?
No, the only time I ever adjust my stop is to tighten it up. Once my stop is set, if it goes against me immediately, then I take my loss and I move on to the next trade. There's no adjusting my stop to give myself more room. The only thing I will ever do is tighten it up.
Clay's crying over there.
To Benjamin Franklin the trade then.
Yeah, and back to your point, Clay, that with this, I mean, yes, you want to have the rules, but you have to remain flexible. You can't. The market isn't a rigid thing. It's a living, breathing thing that is going to do what it's going to do, and you can't control it. So having your rules, which are written down on paper or on my spreadsheet that I'm looking at here, I can't control. That's taking something that is fixed and trying to apply that to something that is going to do whatever it's going to do, and I can't control it. So I'll start off with my rules, but during the trade, I remain flexible and I adjust. And to give you a good example, yesterday I was in a trade and I was trading a breakout, and it did exactly what I wanted for the first two bars. I mean, it really looked like a home run trade, and it got down to a level that I had already established was going to be a support level, and I wanted to see it break through that. I was okay if it paused at it for a moment, but I was watching it really closely. Price came down and I was trading it with a 5-minute chart at the time, and so price came down on the 5-minute and put in a really nice bearish bar, but then it stopped right at that level, and then the second bar opened and it struggled to go down. But it couldn't break that, whatever that level was, couldn't break it. And I realized at that point, I'm like, okay, this is going to just fire back up. This is not, the sellers can't drive it down any farther. The bulls are too strong. So I quickly hit my close position button, got out, and sure enough, price turned around and shot straight up. And, it would have resulted in a loss, but instead of, I didn't make my 2R, but I did make 1R. So I took my profit, and so 1R is certainly a lot better than taking a loss or break even.
No, absolutely, and we agree fully. 100%. You can't take rigid rules and apply it to a living organism that is dynamic, that's constantly moving. But you also did define a rigid rule, which I 100% agree with. Your rule being, I will adjust the stop loss, but it's always in my favor. I'm not going to rationalize it to all of a sudden, well, give myself a little bit more room, give myself a little bit more rule, where all of a sudden your risk is changing to the downside because you are rationalizing it. So yeah, I fully agree. Rules can be bent because you don't want too rigid of rules, but you do want rigid rules like the one you have in regards to your stop losses. So I mean, I would say we're in full. Ches, do you have any? This is a great conversation. I mean, you get where both of us are coming from here. Steven does have a rigid rule within his non-rigid rules, if that makes sense.
Oh, no, absolutely. And kind of an example for that is I know, and by no means if this works for you, continue to do it. But what I've found is that while I might trail my stop loss down, say, using a moving average or something, I found much more success in, say, staying with a trend trade is if I'm using that moving average and, say, it comes near a short-term resistance, putting my stop loss above there instead of completely following down my moving average into, say, a zone where it's consolidating a little bit. These are just examples of, being flexible, because I love how he put it in the sense that it's a living organism. Everything doesn't just go up and down in an absolute straight line to target or to stop loss. There's millions and billions of players and money in the market. You just have to be flexible for certain rules. And I love the rigidity of the stop loss rules. He's never taking on more risk because, he still thinks he's right, but it's just squeezing against him. He's only essentially taking risk off the table as the trades move in his direction. So I absolutely love it, and I completely agree.
Well, and I'll just add this. I mean, the way that I'm approaching trading is that I can be right 30% of the time and still make money. But that all hinges on me never adjusting my stop loss to give myself more room. I just have to take that loss, and move on to the next trade. If once I start adjusting that, so if I'm willing to risk an R on a trade, and then next thing you know, I'm like, I think I just need a little bit more room. Next thing I know, I'm losing 1.5 R. Then I'm throwing off that whole formula of I can only be right 30% of the time and then still be profitable. And meanwhile, I think my win percentage is slightly below. I think it's around 43% is what my win rate is. So I can be right 43% of the time and still be profitable, but that all hinges on me sticking to that rule of never losing more than 1 R on any trade. And again, my goal is never to lose an R. I'm willing to do that, but as soon as the trade is triggered and I'm able to adjust my stop and tighten it up so that I lose less than that, that's what I do.
Yeah, I love that. And just to kind of pile on here, yes, your formula depends on the R, meaning you can't start to adjust it to 1.5, et cetera, et cetera. But the overlying dynamic that it also depends on is that you know how to find setups. You know how to read a chart. You know how to actually pick things where probabilities are in your favor to begin with. Without that, it's just, correct, maybe I'm wrong, but I'm pretty sure you're not just going around finding a random stock and then just throwing money into it and saying, well, as long as my R is fixed, it'll work out over the long term. There's that thing outside of the mathematical formula, meaning your knowledge of charts and your ability, your chart vision. Is that a fair assessment of the situation?
Absolutely. And it's a really good point, because every morning when I sit down and look at the pre-market, when I'm analyzing, I'm not just looking for any gap. There's a couple things. I don't trade ADRs. So I shouldn't say none. I mean, like Momo is something I will trade, but for the most part, I avoid ADRs. I avoid, and it's funny because every morning when I'm doing my pre-market, I've got the your chat panes up, I've got the lounge up, and I've got the over $1, and I'm looking what everybody's posting, and I see a lot of the gaps that people are posting, and yes, they're gapping, but they're not gaps that I would even consider touching. So, for instance, stocks that have a stock offering, that's not a gap. I mean, they might be gapping, but they're not going to. There's no. What I'm looking for is is there panic? Is there a reason why people are going to be buying and selling? And a stock that's gapping just simply off of a stock offering doesn't have edge. I shouldn't. I mean, there are some times that stocks that have a stock offering will move, and there was one the other day. But for the most part, they'll open up and they'll just flatline. I also stay away from stocks that are involved in an acquisition, because again, there's really you got to look at the catalyst, and so I'm looking at the catalyst, that some type of a catalyst that is really going to move that stock versus something that's going to just gap it and then flatline.
I love it. So basically what you just said is gaps are not gaps.
They're not
sure,
all
a stock
created
may
equal.
gap, but it is not the same as another stock that may gap. So there are different varieties of gaps in and of itself. So, and that's a great point, and why trading can be difficult, because new people hop in and they think a gap is a gap is a gap. Well, no, there are various types of gaps, and within PH's strategy, he needs a certain type of gap. Now, those other gaps that he's not interested in, by no means is he saying or is anybody implying that you can't make money off those gaps. But for him personally, hopefully this is an overarching theme you've noticed. For him personally, he knows the type of gap that fits into his personal risk tolerance, that fits into his personal strategy. And that's why you just can't go blindly following people, because if that person's gap is different than what you may feel comfortable with in terms of gaps, it's just not going to work out. So that's a great point on your part. I like how you very distinguished said, no. A gap is one thing, but there can be different gaps within gaps. And I realize this may sound confusing, but that's just how trading is. You got to understand the overall concept of it all, and that there's many moving pieces that are a part of things. Now, to kind of switch gears a little bit, looking at the time, and I definitely, because I'm curious about this, but you have launched, and you sent me a little bit about it, but I'm still I know the surface, but I don't
Right.
understand any of the motivations or anything behind it. But you have started a site, and correct me if I'm wrong, but it launched as of today, of the recording, right?
Literally about 20 minutes before we got on the phone together.
Okay, so I'll hand it over to you, but I'm just curious, what is a site? And really, actually, before you get into what is the site, what are your motivations here? Why did you decide to take on this endeavor? You're obviously an entrepreneur. You own a business. You have your trading business in terms of you personally.
Mm-hmm.
So now you're opening up another business in a sense. So I guess just walk us through what this site is and tell people about it.
Well, just to touch on something that you just mentioned, like if there are, and I'm sure there are a lot of them, new traders listening to these podcasts, one thing that you have to understand is I'm in year 3 of my trading journey. So I've been at this a while. I didn't just come up with all these rules and these parameters for trading. It has taken me, I'm about 3 months into trading. So it's taken me all this time to define the right strategy and then to fine tune it. And I'm doing it every day. I don't have just this strategy. It's like, okay, that's it. And I'm going to just trade that. No, I have to adjust and constantly modify my strategy. But when I started trading, part of what I struggled with, and thank God I found you early on, Clay, and I really mean that, because when I first started trading, I made all the rookie mistakes that everybody else makes. I was buying at the tops and selling at the bottom and averaging down and doing all the things that you would absolutely yell at me for and everybody else. And one of the things that, in looking back on my trading journey, and you might recall that when we were in Baltimore together, I had this concept at the time, and I had secured the domain name stocktradersjourney.com. And I remember you looking at Nate going, how come we didn't get that? Why didn't we secure that domain? Because your podcast, you're always talking about, tell me about your journey. And at the time, what I wanted to do, my original concept was to document my experience as a new trader and just follow my journey and would it result in success or failure or what have you. And as time went by and I didn't do anything with it, because I think what I was struggling with was, who cares? Who's going to look at that and okay, maybe I might get a couple followers to look at that and say, okay, it's interesting. He's a newbie and he's attempting to trade, and yeah, we'll check it out from time to time to see if he's being successful or not. I really realized that more or less it would just be a hobby kind of website just for myself, just to document what I'm doing. So as I thought more about it, I realized that what I wanted to do was create a website that would be a resource for new and developing traders, and put together information that would help them avoid all the pitfalls that I certainly encountered. I mean, just like any new trader out there, one thing we all do is we look for the Holy Grail. And the reality is the Holy Grail doesn't exist. And I know that a lot of people listening to this podcast can relate to that initially you think, okay, I just need that one thing that's going to give me the edge. And the reality is that one thing is education. There's nothing out there. You can't buy an indicator. You can't buy that Holy Grail. The Holy Grail is you becoming educated and you developing a system and a strategy that, as we've talked about, that fits with your personality. So what I decided ultimately that I wanted to do with this website was put together a resource that consists of reviews. So the website that just went live today, I do have. I was talking to Nate about this prior to starting, which was because I'm just launching it. I at least wanted to get a handful of posts in there so it doesn't look like I'm just starting from scratch, which I am. But so I have 4 reviews in there right now. One of them then is on Clay Trader, of course. But the idea behind this is to provide new and developing traders with the knowledge that is going to help them avoid the pitfalls. and not get sucked into these holy grail schemes that you and I both know are out there, and all the people that are just preying on the hopes and fears of new traders and taking their money and then delivering something that is just useless, that's not going to help them in their trading career. So by doing these reviews, and the reviews are going to consist of, I'm tying it together with social media. So I've got the website, I've got Facebook, I have Twitter, and YouTube, of course. So YouTube will be
make sure
more
you
or
get
less
Instagram too,
and Instagram, yeah, and YouTube will be more or less the video component of it. So every review that I do, if people don't feel like reading a review, they can just go to YouTube and watch it, because I'll do the actual video recording. But the idea is to do the reviews of everything related to trading, whether it's educators, live trading rooms, technology, trading tools, anything that you can think of that's related to trading. I'll be doing reviews of it and then making recommendations. So, for instance, the 4 that I just launched today, the 4 that are on there, I decided, I should start with 2 that are good and 2 that are bad. So 2 of them I'm recommending, and 2 of them I'm saying you should absolutely positively avoid, these educators.
Let me ask this real quick.
Mm-hmm.
Are you accepting affiliate dollars for anything?
I am not.
Okay, so, and to be, I know you said you did a review of me. I have not read it, but I mean, full disclosure on our side, in which you can gladly confirm, which you just did, we are not paying. There is no affiliate set up with PH here or anything like that. So whatever he has said, that is on his own will. But
you gave him 10 million mind shares. Let's be honest here.
Yeah.
Clay.
Okay. Fine. Well, yeah, besides the mind shares and besides the worthless penny stock shares we'll give him, there's nothing else. But from just an outsider looking in, I'm very glad to hear that you're not accepting affiliate dollars, because I mean it's hard to proclaim that you have people's best interest in heart if you're saying all these great things and all of a sudden it comes to light that you're being paid an affiliate commission. So good. I'm very glad to hear that. That adds a whole ton of credibility to things.
No, I'm not accepting and I was going to say, with these with the interviews that you're doing now, when we first did episode 15, we were doing it via Skype so I could see you. So I'm assuming if I could see you right now, you're winking at me when you're saying that there's no money being exchanged, right?
I am winking with both eyes right now. Yes.
Trying to give me a butterfly kiss?
Yeah, exactly. Something like that. Whatever you kids are calling it these days.
No, I'm not being paid. These are completely unbiased reviews. I'm not receiving any money from anybody that I'm reviewing, positive and certainly not negative. And hopefully the negative ones don't end up in lawsuits. But but for instance, your review, and I encourage you to go and check it out today, Clay, after we if you have time before you go.
I got a dishwasher to unload, as we discussed beforehand, but I will try my best. I promise you that.
I will definitely look it over.
So sentence number 1 on your review, it starts off, full disclosure, I'm a Clay Trader University member. And so I go in to explain, I am part of your membership. And I also talk about our personal friendship. But I am very transparent and explain to people that why and how I came to find you and why I chose to become a member of Clay Trader versus somebody else. And I lay it all out there, but I'm very transparent when I say, look, I am actively, and the difference is I'm the paying member. I'm not being paid. I'm paying you. And so, the only reason I'm reviewing you is because I want people to know that you're honest and you have integrity. And if they want the best bang for their buck, they should be looking at investing with you. And then I point out who they should not be investing with.
So, well, I obviously I appreciate all the kind stuff there. So just a minute, again, like I said, I had very surface deep understanding. So for these live other trading rooms that you're going to review, are you planning on talking to the owner and saying, hey, I have this review site, I'm going to be doing a review, can I get access for a few days to check things out? Are you just going to pay to check things out? But in order to do a proper review, and I bring this up because I've been reviewed by other people, and it's like, well, how can you review me when you've never even been in the chat room where you've never even taken a course. Like how does that work? So just from that perspective, kind of, because that always rubs me the wrong way, is how can you call yourself a reviewer when you haven't even looked at what you're reviewing? You're just making a whole lot of assumptions. But what is your plan of action from that point of view? Are you going to be requesting access because you're doing a review, or are you just going to flat out pay? Because again, and I'm just giving you some live feedback here, and Chaz, you can weigh in too. But to me, it takes away credibility from people if you've never even been inside of a chat room and experienced, a training course or whatever their, services, they're offering. So what is your plan of action from that point of view?
Well, so right now, so I've already touched on, I made all the mistakes that all new traders make. Part of this motivation to do this is to share with people the mistakes that I made, and don't repeat my mistakes, learn from my mistakes, and avoid those pitfalls. So trust me when I tell you, I have an awful lot of reviews to do based on personal experience before I get to the ones that I don't have personal experience with. So initially what I'm doing is I'm going to populate this with all of my bad experiences. And I can truly talk from personal experience when I
like
write
that.
These reviews. And so that's the initial one. But then to answer your question is, I'm only going to review things that I end up having a personal experience with. So if I reach out to somebody and I want to do a review of their live trading room or their courses, I will ask for access. And if I'm not granted access, I'm not going to do a review, because to your point, how can I fairly review somebody or a firm or a trading room if I haven't actually had personal contact with that?
No, and it's a great point from both you two, because Clay, I know you know what I'm talking about, but there's this one guy who put a review up on our website, and he says, I don't really know if Clay trades with live money because I've never joined and I don't actually know anything about the program. And we're like, well, how can you review that? So I think it's a great way to kind of approach it. And honestly, I think people are really going to get a ton of value from hearing about the pitfalls that you had to go through personally, and help people to avoid it. It's kind of similar to the purpose of Clay teaching people as well. He's trying to help you avoid buying the top, selling the bottom, and doing that through things he's learned personally. Because Clay, you're from the school of hard knocks, aren't you?
Oh yeah, I have an entire video about how I learned how to trade, but totally paid my tuition. And when it came to real estate, and like I said, I have a video, and we'll put it in the show notes. I was like, all right, I'm not going through that again, what I did through in stock trading. So when it came to real estate investing and learning all that, I can never remember the number, but it was either $3,000 or like $4,000 that I spent on real estate investing education, because I was not going to go through the headache that the whole trading thing was. And so yeah, I've been through the school of hard knocks for sure, and I like the idea a whole lot, PH. So we'll put it in the show notes. We'll link to the site, but what is it again? What's the URL?
So the website is stocktraders.com. And
stocktraders.com?
I'm sorry. I'm sorry.
I was going to say, how much did you must have paid like $50,000 for that.
All right, scratch that from the podcast. Sorry, it's
no, that was too good. That was too good to not. No, we're definitely leaving that in. That's good stuff.
You know what I was reading something on my screen, and I basically read what I was reading to you. No, it's stocktradersjourney.com.
Stocktradersjourney.com.
Yep, stocktradersjourney.com. And my email, if anybody wants to reach me through there, is trader@stocktradersjourney.com.
What about social media?
So social media, I'll have links on there, but you're going to make me pull all this up. I just launched it today.
Well, I'm trying to help you. I'm trying to drive some traffic your way. It sounds like you got a pretty noble mission going on there.
Yeah.
I love the word you used, experience. Right now, everything is focused on your experience, what you've been through. You're not these reviews are of my assumptions. No, these are reviews of your experience. So I am all for driving traffic, and I'm glad to hear that there was another positive review out there. So it's not, because obviously that wouldn't be very credible if it's Clay Trader's the best and then there's 50 other negative reviews. I'm sure there's other good things out there. So as long as you're doing it through experience, then I'm all for it. So yeah, I'm going to make you drag up all that social media stuff. And I guess worst case, here, watch this. I'll flip it around and drive traffic to claytrader.com. If you want all the social media links, just go to claytrader.com in the show notes page, and we'll put all that stuff right on the show notes. If you come to claytrader.com / what is our URL / podcast / episode 125.
It'll be in the show
Chez?
notes.
Was that pretty good on my part to flip things around?
That's a lot to put
It's a
down.
win-win for everybody.
Yeah, I'm definitely going to put in the show notes, though, so you don't have to, furiously type on your keyboard while you listen to Clay put it. So you can just check out the notes, and it'll be in there.
So
Yep.
Clay, I will mention the one exception to that I will say with regard to having personal experience. If I find something out there on the internet that is just so blatantly just trying to pull one over on new traders, I'm going to expose that. And
I fully agree there. If it's this binary option super robot
Right.
for
Exactly.
$9.99.
Right.
I will definitely give you a pass there in terms of credibility when something is just blatantly like kick you in the teeth obvious. So yeah, I'll concede that you're absolutely right.
Well, and if you remember, I had sent you an email, I don't know, maybe a month or so ago, and I said, you got to check this out. It was a live webinar.
Oh, no. Yeah. I'm going to be doing a video on that. Now, I'm not going to call out this site just because I don't want to start a bunch of drama. But
Right.
I am 100% doing, and I still have your text that you sent me. And I'll be taking screenshots, and I am doing a video on that because that is just as scammy as it gets.
Well, that review is one of the ones that's on my site right now.
And
I was just reading it, and I'm just shaking my head.
Yeah, so it's the fear of missing out tactics and just completely deceiving people from the moment the webinar begins. And I'll just leave it at that.
And you know what? And sure, maybe you haven't done the service, maybe you haven't signed up for the chat room, but you still have experienced what you experienced. And what you experienced is just like, are you kidding me? If you're willing to do that, then what else are you willing to do? I mean, can you see that? Oh, Nate,
and
we
the
really
only
got to get
reason
that video up. We got to do that video because just thinking about that, when you texted me, I was just like, oh, that is just so good. I'm glad that's up there because that is, and again, you're not assuming things. That is literally something that you experience, and that assuming that certain activity is still going on, anybody can experience if they don't believe you. So I absolutely love that. No credibility loss there.
And it was by total accident that I happened to expose this because if you remember, and I'm not going to go into detail. You can go to my website or you're going to do a video of it. But I'm
assuming you name names. I'm not going to name names in mine. So if you want names, go to stocktradersjourney.com.
Oh, the names are all over this review. No, I hammer them big time because it is just a blatant deceit. And you're
right. Again, it's a fear of missing out. It's all the typical marketing tactics, the sales tactics, all this stupid late night infomercial garbage. It's all seller psychology that they're using. You absolutely nailed it.
And I was going to say the only reason I found it or stumbled upon it was because I registered for a live event. I watched it for the full 3.5 hours that I had and went to the very end. I didn't sign up because I'm to a point in my trading career where I know better. But I will, for fun or just sometimes with these webinars, if I can just pick up, one tidbit, one thing that will help me, then it's worth the time. But so I happened to sit through this webinar all the way to the end. I didn't sign up, but they were asking $3,000 for what they were selling. And then I realized the next day I got an email saying, hey, sign up for this live webinar. So I logged in again, and about 20 minutes into it, I'm like, wait a minute, this isn't live. This is the same one I watched yesterday. And then I proceeded to watch that same webinar every day for 4 or 5 weeks during, Monday through Friday at 1:00. It was the same webinar every day promoted as a live event.
And there's certain, I don't want you to let all the cats out of the bags, but there are certainly quote unquote events that were occurring during this quote unquote live webinar that happened every single time. And these,
it's unbelievable. I mean, once I realized, and then I'm looking at going, the poor people who actually did drop $3,000 on this education, and they're just being taken for a ride.
It's a whole new level. I just went through it and I was like, that's like I said, absolutely whole new level of FOMO. It's just ridiculous.
But looking at the time, this was a great. Man, thank you for coming back. Sounds like your website's going to be awesome, and not only that, the conversations that we had, just hearing about Ches and I were talking, behind the scenes, I guess behind your back, technically on Skype, just about it's crazy how far you've come in the 2 years, and just listening to you construct or how you construct your trade plan. What your path is, if you will. And your understanding of rules, because a lot of people don't understand what's a bendable rule and what's a rigid rule.
Right.
And, that was a fascinating topic there. So have you got any other American Girl dolls for your daughters? Or do you have one daughter or two? I get one, right?
I thank God she has she has two of them now, I guess. She has the one that I bought her down in Nashville. And then I bought that one like a month before my wife took her into New York City for her for her day at the American Doll Girl store. So she has two of them now, but thank God she has them, and she's glad she has them, but she's really focused on Beanie Boos, which are a whole lot less expensive.
That was one of my favorite parts about, because I can totally relate as a dad of now 3 girls, but it's like, PH is like, all right,
Sucker.
I'm so glad there's an American Girl store, but I literally have to spend some time here in Nashville going to the American Girl store for my daughter. So I totally get it, but that was one of the, just, I guess when you become a dad and a parent, those are the little things you remember. It's just how one of your big tasks was, I'm here to meet other traders and hang out, but American Girl doll, here I come. And if you know what PH looks like, he's an in-shape guy. He's a big guy. So to just picture you walking through the aisles of American Girl.
Yeah, I don't fit in that store.
Yeah, that I'm sure that was a sight to see. So do you want any sort of closing comments here before we part ways? I mean, I'm sure we'll have you back at some point in time. If I remember right, we tried to have you for a group podcast.
You did. Yeah.
And your schedule just didn't work out.
Yeah, unfortunately, I couldn't make that one, and I really regret not being able to do that. But I'll be back next week if you want me to. I love talking about this stuff.
And you know what? We will certainly have you back, I'm sure, much sooner this time, because if anything, I'm just thinking out loud now, and I guess for you as listeners, if you would be interested in this, leave those in the comment section below, whether that's on YouTube or the site. But as your site unfolds, you go on more adventures in terms of, testing things out. I'm sure you'll come across some huge horror stories. So maybe we could have like a horror story type podcast where you just, kind of sit back and tell us about some of these services out there, these products out there, and maybe we can all get a good laugh out of it, but also turn it educational in terms of,
right.
Hey, you got to be wary of this stuff. So maybe we can do that at some time in the future.
And it's interesting because I know it's been an hour, and I mean, there's so much about like the approach I'm taking to trading, especially with these gaps that we didn't even touch on. I mean, that's the cool thing about what we're doing is that, especially if you have a passion for it. I mean, there's so much you can cover, so much you can talk about. But the one thing, if I may, I just want to say before we close is to the listeners, especially to the new and developing traders. Look, I want to make something very clear here. I am, again, in year 3 of my trading journey. I'm not yet consistently profitable. And I want to make that clear. I'm not. Too many people come on podcasts and are like, "Oh, look at me! I'm this successful trader." I'm not. I run a general contracting business. I bear the major responsibility for taking care of mine and my wife's daughter because my wife works in New York City. Like, I juggle a lot of different roles and responsibilities. I wear a lot of different hats. And has that hindered my trader development? Maybe. But I wouldn't trade it for anything in the world. But I guess what I'm saying is don't get discouraged. Don't allow the amount of time that it takes for you to get to point A to point B to be a deterrent. Because again, would I like to be consistently profitable right now? Would I like to be trading for a living? Absolutely. But I'm not there yet. I get one step closer every single day, and it will come to that point. But I don't want to come across like I'm this, hugely successful trader who can just, throw out advice to everybody. No, I'm learning alongside of all the other new and developing traders out there.
And with that, I think that's a mic drop type closing. So,
boom.
Yeah. Do you have anything to say, Ches? I think that was a pretty good way to
Nope,
close things out.
I think that's just a realistic look at trading and an honest answer, and I think it's a perfect way to close out the podcast. Thank you again for being a guest.
So, PH, thank you very much for hanging out, and we will certainly have you back in the future.
Thank you. I love doing this, and it is, again, it's an honor to be asked to be on these podcasts with you.
So I know a lot of you, just bear with me because you've heard me say this time and time again, but for you listeners, a few final things before you go. First, StockTradersJourney.com. Go check it out. If there's like buttons and you like something that you read, click that like button, click the share button. If you learn something from PH taking time out of his schedule, then a very simple way to express a thank you is go to his site, click on some share, like buttons, whatever's there. Like I said, I honestly haven't been there yet. It just launched 20 minutes ago, but check it out. Thirdly, when I throw in too many bullet points, I confuse myself. Now, as far as claytrader.com, if you enjoy the podcast and you're listening to it on YouTube, check out the channel. Hopefully you ultimately decide to subscribe, but a lot of other videos out there other than just these podcasts. If you're listening on iTunes or any of the other podcast players, then please subscribe and leave us a rating. Ratings go a long way. And then finally, if you're at claytrader.com and listening to this on the show notes page, click that share button and leave us a comment below. We will definitely read those and interact with you. So as always, a big thank you to you as listeners. To think that we're at, for you members, a mini grandma number, but 125 and still going strong. It's a testament to you as listeners and then our awesome community of people that are continuing to come on here and share their experience. So thank you very much for that. And I will see you all back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.